All right. So it is Feb 17th on a Tuesday. And the market, as of today, we've got some pricing diplomacy um, in the mix, more heavily than usual. There's escalations at risks, geopolitical risks, which remain structurally embedded within the global energy infrastructure, and macro liquidity systems, right? So the oil softness, precious metals, cooling crypto ETF flows, defensive bond positioning. These all collectively reflect a environment of caution, recalibration, slight panic, and for investors, I'm recommending you maintain composure, maintain strategic flexibility, diversify, have cross asset awareness. This is essential amid the evolving geopolitical and macroeconomic conditions, right? So let's take I've got some articles here. I'll go through these. We've got the Iran closing the Strait of Hormuz. That's sort of the first article to look at, right? So, um, the closing of the Strait of Hormuz has intersected with notable movements across oil, precious metals, bond yields, cryptocurrencies, foreign exchange markets, right? While diplomatic progress between the United States and Iran has temporarily eased these market tensions, right? There is structural risk remaining. As military buildups, more flotillas going into the region, shoot downs, closures, embassy warnings, airspace is being shut down. So it's actually moving towards a very warlike pattern, even as peace talks are ongoing. Um, so today Iran temporarily closed the strait. Um, you know, let's take a look here. Parts of the strait will remain closed for a few hours for precautions. This is going to affect oil. Oil might not be able to move through. You've got Saudi Arabia, Iran, Iraq, United Arab Emirates, the Gulf of Oman, the Arabian Sea. Um, so that's happening. Here we've got an article here.
برشون میرسه که مرتبا میگه رئیس جمهور آمریکا.
It seems to them that, and the US president keeps saying this, the US Army is the strongest army in the world. The strongest army in the world may sometimes get slapped so hard that it cannot stand up straight.
So this is for Reuters. And the Iranian leader is making some threats like he usually does. This was yesterday, actually, Feb 16th. But it was updated recently. Guiding principles, nuclear disputes, Brent crude falling 1%. Let's look at what Brent crude is at right now. Brent crude price. So if we look, let's take a look. We've got it at 62. So it's not exactly down, I wouldn't say, Yeah, it's not exactly down per se. It's not up either. It's sort of just kind of in the middle. Let's take a look at Bitcoin price. Bitcoin is somewhat down, somewhat down on the month, that is. we started out at around 78, 77, but it quickly fell down to 64 and then rebounded to 70. And right now it's not too far down from that 70 level. But this is a very bearish signal, of course, especially given the high was around 120. Let's take a look at the gold price. Gold is 48 right now, so and silver is also 73. So these are pretty much down. Take a look at the 30-day. You'll see that they got up to, this got up to about 55. This got up to 120. This is around the last of Jan, 1st of Feb. Crashed. Gold sort of rebounded towards that 5,000 level, although it's drifting now. Silver did not rebound as strongly as gold. It had a little bit of a recovery, and now it's sort of still down near that low. I expect that gold and silver will continue this trend, right? Maybe in Q2, Q3, we'll start seeing a sharp rebound. Maybe in Q4, we'll see a rapid acceleration, right? So we it's going to sort of repeat what it did last year. If you look at the gold charts from last year, let's try to say 1 year. Around Feb, it didn't really do much. It took until about Q2 to kind of pick up, and then it really accelerated in Q3, Q4. So I expect the same thing to happen this year, because COMEX has about, I think, currently speaking, they have about 88 or 90 million ounces right now, down from like over 100 million earlier. Not too long ago, like maybe 30 to 60 days ago, they had over 100 million. Now they're down to 88, 90 million, something like that. So I expect that drawdown to continue until it gets to a very dangerous level for them, which probably won't happen until this time, maybe, July to September, maybe October. Then we'll start seeing the price pick up as those drawdowns threaten their ability to keep prices suppressed. So we're looking at maybe a 6 to 12 month breakout for gold and silver. Don't expect the price to break out right now. The banks are in containment mode right now. So we talked about the Strait of Hormuz, the oil markets, right? So as I said, Brent crude fell a little bit, but hadn't fell too much. They're likely to stay volatile, but also likely to stay within a range of, say, no less than 50, no more than 75, right? So somewhere in the ballpark of 60, 65, which is where we're at right now, right? Likely to stay in that range, unless a major war breaks out immediately. Then we could see it kind of more than likely increase. If a major war breaks out, I would expect the price to increase, not decrease. But you never know. Markets can be irrational sometimes. Who knows? Maybe it'll decrease for some reason. Can't predict the future. Just make educated guesses. But yeah, for now, it'll probably stay in that range. Probably won't move too much. If you do see an all-out escalation of war, I'm leaning bullish, or I shouldn't say bullish, but upward, right? Price going up on oil, which is bearish or bullish, depending on how you want to look at it and which side of the market you're on. It says investors are closely watching the U.S.-Iran relations for any escalation or conflict that could lead to Iran closing, which they did. In Geneva, Ukraine and Russia were set for peace talks. Russia is focused on territory, So it looks like the Russia-Ukraine conflict is coming to a resolution. It's not clear when exactly that will happen, or how it will happen, or if it will last. But there is some drawdown in military, right? Now, usually when you have increased geopolitical uncertainty, gold and silver spikes, but in this case, gold and silver are declining. This is being, pressured by the U.S. dollar, thin liquidity conditions. Shanghai is being closed right now for Shanghai holiday season. They're going to be closed for a week. Traditionally, it's viewed as a safe haven asset. So when things happen, typically gold and silver go up. But in this case, they're going down because of liquidity problems and currency problems. So in terms of bonds and equities, the equity market, right? First, let me go over. So we got gold in Delhi has a premium. Mumbai, Chennai, Hyderabad. So these are Indian physical markets. They do have a premium. But the premium has collapsed a bit. If you look at the Shanghai premium, Shanghai premium gold West. If you look at the Shanghai premium, you see it's come down quite a bit. It sort of peaked at about like $15 almost here. And even when they smashed it down, it was still at that $15 premium. But right now, the premium is, the gap is sort of closing. Shanghai did do some margin cleaning. They did do some account restrictions to try to, prevent instability and premiums getting out of hand. So they did do some corrective actions, as well as COMEX. COMEX did do some corrective actions as well, with margins and so on and so forth. So these are stabilizing measures. You should see that premium start to close. You should see that arbitrage gap start to close, and you should see prices remaining flat for some time until those physical COMEX drawdowns accelerate in Q2, Q3, Q4, like I said, and then you'll see that premium spike again. Crypto, it's not doing well. I expect crypto to be down for quite some time, right? Got Bitcoin, Ethereum, Ripple, Dogecoin, all down, moving in lockstep. The entire crypto market is pretty much down right now. It says crypto market shows weakness. Trading sideways, remains above 67,000. 46% drop from all-time highs. Bitcoin trades slightly above 68. It remains below the 50-day EMA at 80,000. The 100-day EMA at 87. The 200-day EMA at 93. So you can see it's trending down, right? So the 293, the 187, the 50, 80, and now we're at 68. So it's in a very, very bearish market. Says the moving average divergence indicator shows a potential bullish momentum, while the money flow index hints at 40 growing buying interest. Resistance at 70,000 may trigger an upward trend towards 72. Now, that's possible. We could see a short spike, and we have seen a few short spikes above 70, but overall, it's looking pretty bearish to me. And all the other cryptos are pretty much falling in line. So outside of some market catalyst, like a Supreme Court decision or a new law, I'm leaning pretty bearish on crypto right now. But yeah, so if you're looking at all these different assets, the current cross asset implication for your portfolio strategy, right? The current environment demonstrates a nuanced, complexity between, geopolitical risks, military signaling, financial markets, commodities markets such as oil, gold, silver, fintech products like cryptocurrencies. We're all getting thin liquidity driven moves. They're getting large institutions with thin retail leveraging. Investors need to recognize that the markets right now are very disruptive, asymmetric, and overall highly volatile and highly risky right now. So right now it's a purely gambling bet. So what is the smart money doing, right? Take a look at ETFs by dividend yield. Take a look at that. Search this if you want something safe right now. I think there's a website called Stock Analysis ETF by High Yield Weekly Dividends. Yeah, Stock Analysis. So take a look at Stock Analysis. This is my recommendation, right? You can get some really high dividend yields, right? I mean, some of these yields pay basically above 2 to 3% per week. So that means you're getting a weekly dividend, and if you put in, let's say, $10,000, some of these have the potential to pay you close to $1,000 a month. Seriously. So these are what I've been looking at, and this is pretty much better than cash in some cases. Like, take a look at, now keep in mind a lot of these do have a lot of depreciation, so keep that in mind. So you want to look at the performance, right? But when you look at the performance, right, like the year-to-date performance, right, don't just look at dividend yields. Look at the year-to-date performance. And you can still see this GDXY doing really well right now. But if you look at the actual dividend yield for GDXY, it's about 50%, which is still phenomenal, right? And it's a weekly paying dividend. So that means, what does that mean? That means if you put your money in here, you'll get 50% a year, or about 2% a week, and you'll get capital appreciation, right? So you're also getting capital appreciation. Keep that in mind. Capital appreciation, high yield dividend, safe asset. It's a gold miner's option income strategy. So you put in, at 2% a week, you're getting, you put in 10K, you're getting about, quite a bit of money. You're getting almost $1,000 a month if you put in 10K. So you're getting almost $200 a month, $200 a week off a 10K investment. And you're getting capital appreciation. I mean, look at this appreciation, right? So, I mean, yeah, if you zoom out on the 5, you're getting, so it's only lost 17% of the value over a 5-year. But you're getting a 50% per year. So that would have been a 500% gain off a 17% loss. So you're still up almost 500%, So this is where I would put my money if I was, right now. And then once markets start to get more predictable, go ahead and get back into trading. So anyway, guys, that's my recommendation for today. I'll keep you updated on price action. Have a good one.